Yeah, good morning. It's been pretty bad. It's been a pretty torrid summer of economic data and in terms of overall economic performance. But I actually think that as we come to the end of the summer and kind of now look forwards to the fall, actually things might perversely actually be on the cusp of getting a little bit better. I mean, these service indicators that you alluded to in your package actually were really disappointing. Weakest service producing or service PMI numbers since 2019. But in manufacturing and construction, actually things are beginning to stabilize. And in fact, with local governments being authorized to accelerate borrowing in August and September, and what, of course, local governments do is to finance infrastructure and housing, low-cost housing. The possibility is certainly there, I think, that things will actually pick up a little bit in China in the rest of this year. We shouldn't get too excited about it because it's really just a kind of a cyclical kind of rebound from what was a very, very low starting point. But it's not quite the collapse that I think a lot of people were kind of talking about a few weeks ago.
Well, very interesting to hear your perspective, because certainly there's a lot of pessimism around Chinese economic prospects out there. When it comes to the real estate sector, a couple of years ago, the number one theme was deleveraging, deleveraging, deleveraging. You fast forward to today and you've had multiple bond defaults. You've got Country Garden, as I was just talking about, is sort of trying to restructure some of its debt onshore, also offshore payments under the spotlight. To what extent do you think President Xi is willing to tolerate this much instability in the context of what they're trying to achieve in terms of deleveraging?
Well, welcome to number one nuance in China, because Xi Jinping, we call him president, but actually the Chinese really don't. But Xi Jinping really is absolutely adamant about a number of things. I mean, he's very adamant about national security. He's very adamant about the need to preserve stability above all things, which is partly why the government is so reluctant, as other kind of Western economists have often proclaimed, that they should be actually putting in, much more powerful stimulus into the economy. The government's very opposed to doing this because they don't want to risk the kind of financial turbulence that might happen as a consequence. But the real estate sector, there's no question it's a disaster area. And, even though there might be some improvement in sales and transactions volumes from extremely depressed levels. Remember that, floor space under construction, sales, other transactions indicators are like 40 to 60% below where they were before the pandemic. So, there's possibility, particularly given the recent spate of easing of mortgage restriction measures and the urgency of delivering projects to households that have already been started. There's a possibility we could see a kind of a cyclical bounce in transactions in the rest of this year, but nobody should be under any illusion that this is a sector that's going to get better. It's really going to be in a very, very torrid situation for years to come.